Pep here from Alpha Capital Group with another traders interview. This week we're joined by Fabio. So yeah, Fabio, really looking forward to getting to know you, a bit of your experience and your background and your journey as a trader and with Alpha Capital Group as well.
Yeah, of course, man. Well, thanks for having me on. So my name's Fabio. I'm currently a full-time trader, actually since 2021. My journey started out back in 2019, pretty much just investing into crypto, losing a lot of money, and then understanding, okay, you can make money when buying and the market going up, but there's actually also a method to make money when the market goes down. That sparked my interest. Then I did some research, got into Forex, did the Telegram groups, the signals, the broker deals, everything. And then at some point in time, after looking at YouTube for days and hours in my room, I kind of came to the realization, okay, I don't need a course. I don't need some crazy community. I just need myself to lock in, to dedicate my time to finding an edge within the market. And that for me was, or relied in simplicity. And that's pretty much how, I found out a little bit more about my strategy. And by sticking to one thing, it changed my life.
Yeah, it's interesting you say about the Telegram groups, the broker deals. I think as a trader, everyone goes through that. You know, you're in there for the quick wins. You think you can just follow signals and you're going to be a millionaire overnight. So yeah, I think everyone has to go through that journey. So yeah, it's interesting you say that.
Definitely.
So what got you into trading in the first place? Was it, to get out your 9 to 5, or was it just the process of going for it? What piqued your interest?
Yeah, so actually, as opposed to most traders out there, I actually attended university. I know a lot of us young guys who trade with prop firms are kind of like in the prop firm game to either, when they're in high school or when they're still, let's say, 18. They're like, okay, I want to make money. I want to make a side income. And for myself, it actually just came from actually my father, who was an investment banker. And he told me actually like, you should get into trading. He used to send me a lot of articles about the financial markets back in the days when I was young. Was never really interested in it. But until kind of like I came in touch with crypto, that's when he said like, look, you should really kind of like devote some time to it and look, for example, into the Forex market or into the bond market. Well, back in the days I read about the Forex market, it was the largest market in the world. And that really just sparked my interest of getting into Forex. Then I started reading, okay, the Forex market is dependent on so many individual factors, from geopolitics to interest rates to whatever. This for me at the time was not really something that sparked my interest. It was more obviously like the money side of things and the technical analysis, because it looked pretty cool, like being able to draw lines on a chart and then make money from it. So that's really where my interest for trading came from. And then over time, I started to understand, okay, there's a lot more to it. And then I found kind of like an inner passion for just understanding more about the financial markets, more about, let's say, the fundamentals that drive the markets up and down. And then, using that in combination with trading is kind of like, what really got me into trading itself. So I would say like the technical analysis side of things, that captured my interest, but then understanding actually what drives a market, the entire financial or fundamental picture of a market, that's what really, let's say, got me into trading itself and has kept me in trading ever since.
Yeah, nice. Good to hear. And then with Alpha Capital Group, are you currently funded at all, or have you been funded in the past? What's your current situation?
Yeah, so actually what's interesting to know is that before getting funded with Alpha Capital, I was just trading on personal capital. So I was generating around 3% return every single month consistently for over 6 months. I was doing some other returns as well on the side, just on personal capital. And at the time I was living in Dubai, just trading from my apartment. Then I met my current business partner who I trade together with. And he said, hey, look, you're doing these kind of returns. You should actually use this approach to the market on prop firms. It's like literally, I wouldn't say easy money, but it's like just copy and paste and you're going to be making an extra income. So that's where, I actually started looking into prop firms itself. And he said, hey, look at, for example, Alpha Capital. So I got into Alpha Capital back in September of last year. I did 2 100K challenges, passed them both within pretty much 3 weeks. And then after that, just started trading on 2 100K accounts. So 200K funded in total with Alpha. And since October, been trading on those same live accounts ever since, and done now over $25,000 in payouts with Alpha Capital alone. And then now in prop firms in total, funded over $1 million and over $100,000 in payouts in the last 6 months.
Well, yeah, some incredible numbers, mate. Yeah. So, I mean, to keep those accounts for that amount of time, I think we were saying before this call, I've lost a couple recently. And yeah, what do you say your mindset and strategy is around actually keeping those live accounts?
Yeah, so when it comes to keeping live accounts, I think you need to have a very risk-averse mindset or risk-averse approach. You need to really, let's say slow and steady wins the race. A lot of people obviously take a high-risk approach when it comes to having that funded account, and they think, okay, I'm going to get that 10K payout or whatever. Like, you shouldn't look at it from, let's say, a monetary perspective. Always look at it from, let's say, just a percentile return perspective. Understand, okay, the big guys within the markets, they're already happy with like 15% return on a yearly basis, right? So for myself, I understand, okay, all I need to do is just get, let's say, around 2 to 3% every single month on an account, and then I just park the account. So what I have is, I don't have, let's say, two big accounts or free 400K accounts or whatever. No, I just have all these different $100,000 accounts that I trade. So I have $1 million in funding, trade 10 different 100K accounts. And then what I do is that I split my positions between all my different accounts. And as soon as a trade of mine hits take profit, so on average, I go for around a 1 to 2.5 or 1 to 3 risk to reward. So as soon as I get that 2.5 or 3% return, I park the account, don't touch it anymore. I get the payout, and then I just move on to the next account, just pretty much like that.
Okay, so and do you normally take the payouts when you can, or do you try and stack up the profits first?
Yeah, so I don't really go for high payouts. That's why you're never going to see me on a leaderboard. I like to stay, let's say, under the radar, keep it nice and cool. So for me, it's just about getting all those individual smaller payouts. And then over time, obviously, when you have a lot of different individual funded accounts, that's going to stack up in returns, right? So yeah, I don't go for like a 10 or a 15K payout. For me, like a 3K payout is already enough. I just park the account. And then, like I said, just go on to the next one. And that's, in my opinion, over time, the most sustainable way or approach to trading on these funded accounts. And that's the reason why I've been able to trade these accounts for such a long time. And the next to that, it also, I think, lies in my personal approach to trading. I don't really trade like the lower time frame. I don't go below the 1 hour time frame. Actually, sometimes not even below the 4 hour. I mainly use a fundamental approach because, in my opinion, fundamentals is what drives the market. And then I use my technical analysis to gain an entry within the market. So for me, I look at the longer term swing. So for example, at Euro USD, since 1.02 at the beginning of the year, I've been keeping on buying. And I've been buying it all the way back up into 108. And then what I just pretty much do is, on the 4 hour time frame, get those entries, and then I just stack those entries up, swing it up higher. And then at some point in time, when I get that 3% return, that's the moment that I get out of the market and just stay away. So I don't trade like the 15 or the 5 minute. I don't trade like NASDAQ or S&P or EU 50 or whatever. I just tend to stay with the major dollar pairs so that I understand, okay, these are the fundamental drivers of the dollar, because when you just trade, let's say, one major currency, being for me the dollar, which is also just the largest currency in the world, and let's say the easiest to analyze from a fundamental perspective, because there's always headlines in the news and it's very easy to find information on the dollar. So for me, it's therefore easy to form a fundamental bias, and then I just use my technical strategy to gain an entry point and then just swing it from one direction to the other. And by using this conservative approach, for me, everything changed. Like back in the days, I used to trade on the 15-minute time frame, 30-minute time frame on EU, using SMC. I don't know, a lot of people will be familiar with that. And I still trade the SMC approach, but now with fundamentals, that for me changed the game. Using a higher time frame approach for me was, like I said, so much more sustainable, and has now caused me to be able to rack in these payouts. So for some, it may seem like a boring approach, but it's an approach that works and again, is sustainable.
And then, so that's your approach to your live accounts, and you're very risk averse. What advice or what's your approach to taking challenges?
So when it comes to challenges, my actual, the personal approach that I use is a little bit higher risk. I don't personally use like the 1% risk, or then if you're in drawdown, like a 0.5 or 0.25% risk. For me, it's about, let's say, approaching it from a business perspective. In my opinion, that's how you should approach like the prop firm space in general. So you need to see it as an investment, and that investment needs to yield a return. So when you invest into a challenge, you invest, for example, a $100,000 challenge, you invest $500. You need to understand, okay, that's the investment. What's my ROI going to be on that investment? Pretty much I use a higher risk approach. So I use, let's say, 2.5% risk on the challenge phase with a 1 to 3 risk to reward. So I understand, okay, trade number one, if that's a winner, it's going to get me to 7.5%. And then I just trade a one-on-one with a little bit lower risk, around 1.5% risk on that second trade. And then if I lose that again, then I'll take or increase my risk again, pretty much like that.
And do you stick with the same strategy? So you stand on the higher time frames, or do you drop down on challenges, the time frame?
Yeah, no, always staying on the higher time frame on every single trade that I take, because mentally, otherwise, I'm going to be taking random trades, and that's something that I've learned from in the past. That's not very advisable. In my opinion, you always, when it comes to entering the market, want to stick to one specific time frame, so that you also know what your edge is in the market. I think a very big issue is with a lot of traders is they either trade in or different individual timeframes, or they trade a different array of pairs, right? So you trade Euro AUD, but you trade dollar yen, and you trade Swiss against the yen. Like, they trade 20 different pairs. But when you trade 20 different pairs, the probability of you winning trades is going to decrease because you're kind of like spreading your edge out over different pairs, because every pair moves differently. But if you just trade, for example, only the major dollar pairs, which pretty much move in sync, like euro dollar and pound dollar move the same, and Kiwi dollar and Aussie dollar move the same, you kind of know a little bit better like what the max drawdown is going to be, and that's going to be easier in your approach to trading with the prop firms, where obviously you have to keep in mind that you have a daily drawdown or an overall 10% drawdown, right?
And then, when you first got into prop firms, did you have to adjust your strategy at all, or were there any really big learning experience you faced during challenges which you had to adjust to pass these challenges?
Yeah, definitely. I think that the biggest difference between trading on like personal capital and prop firm capital is, I would say, like also the mental stress from one side, right? Like trading on personal capital, you don't really have to think too much about, okay, what are like the limits that I have? What is the target that I have to get? Like on my personal capital, when I execute a trade and it's in profit, I just let it run. But somehow mentally at the beginning, when I was trading with these prop firms, like I looked at my trade going into profit and I was like only thinking, okay, it's getting closer to that TP. Like, oh, this is now what I can get like in regards to a payout. Like I was calculating my payout every single day, like live to the minute. As well, when you have that profit target, I think everybody can, or I'm speaking for everybody if I say this, like you're in your phase two, you see that challenge go into, let's say, 4.90% or 4.9% profit, and then you're monitoring that trade and you see it like going pip by pip by pip by pip by pip, up and up and up towards that profit target. And you feel it, right? You get all your hands get all sweaty when you kind of like come near that 5% mark, and then we're at 4.98%, boom, it reverses back down to 4%. Like these are kind of like emotions that you don't have with personal capital. So definitely from a mental perspective, it changed a lot when I had to trade with these prop firms. But now, like after obviously the first few challenges, then you kind of like understand like how to manage your emotions more. But yeah, definitely there was an adaptation phase, let me put it that way.
Yeah, and can you share any techniques around managing your emotions? Are you set and forget type of guy where you just turn off the charts, or are you still having a peak now and again?
Yeah, so I actually use a trade copier. So it's called Traders Connect. And what I do is I have like one master account, and this master account is, for example, just $1,000. And then from that $1,000 account, I copy my trades onto those prop firm accounts. So every single time that I look at my MetaTrader, all I see is just small numbers, right? I just see, for example, let's say if I'm trading on that $1,000 account, right? If I look at just a 3% return, you're going to not be looking at big numbers. And this for me just causes a lot less kind of like mental stress, because I'm just looking at a $30 trade as opposed to, like a $3,000 trade. So this is an approach that I personally use and I still use. It's not because I cannot like mentally handle trading on a bigger account, but for me, it just helps in my approach to trading with prop firms.
Yeah, and that's just one of the hardest things to master with trading, is just your emotional state. When you see those big numbers go up or down, it can affect you, pretty significantly. I mean, I close down all meta, anything meta related on my computer, and I just have the target, entry and stop loss just on TradingView, so I'm not tied to any sort of monetary value at all. But yeah, that it takes a bit of a journey to get to that phase. And like you said, if you're deep in challenges, on
Definitely,
your
and
fifth challenge.
I think simply also just applying like I use obviously like alerts on TradingView as well. So alerts at my stop loss and alert at my TP. Also, my strategy is built kind of like for mental clarity or mental ease on the mind, in the sense that I only do a stop loss hit or a TP hit. I don't like manage my position itself by putting my stop loss to break even whatsoever, or putting my stop loss into profit. Because I've in the past, when I started out trading, I often found that by trading my stop loss into profit, I got, again, more emotional. But furthermore, my strategy is also very mechanical. I think having a mechanical strategy is definitely an edge, or something that can contribute to your overall edge within the market. Also from a mental perspective, it makes it a lot easier to trade if you know exactly when and how to enter at a specific point within the market. I see a lot of traders out there having issues with trading because they don't have a mechanical entry strategy. For example, price may come into your POI. So I know a lot of people use, for example, the 618 fib, right? And they use, let's say, support and resistance level or supply and demand level. So let's say the price retraces into your Fibonacci retracement level, and it also corresponds with a demand zone. Then what people will look for is, for example, a bullish candlestick, or they'll just place an order, or they'll wait for the market to come into that specific level. And then when the market is in that level, they'll be like, okay, shall I enter now? Yes or no? However, what you need is a mechanical entry model that says exactly when and how to enter. So if price comes into that, let's say, demand zone and into that fib level, you just need to look for A, B, and Z to happen. And then let's say the outcome will either be D or E, very simply said. So you just need that mechanical edge and that mechanical entry model. And that, in my opinion, will also take a lot of stress away from entering the market and just your mental stress in general when it comes to trading.
And how did you discover your edge? What was the journey to getting to that point? And did you back test that edge, fairly significantly, or you more forward test it? What was your approach around that and how you eventually got to a profitable trader?
Yeah, so in the beginning, when I kind of found the different individual components of my strategy, which mainly revolves around supply and demand, market structure, liquidity, and something called premium versus discount, and then my entry model itself, obviously being mechanical, I had my edge. So I understood, okay, this is how I'm going to enter the market. So what I did, I back tested 100 trades. Then I went on to the live market. What did I found? My results were very, very different from my backtest results. Mm-hmm. So real trading is so different from backtesting. And this is what I tell everybody that I speak to. Don't waste too much time on backtesting because it is going to be detrimental to your trading career. Mm-hmm. Live market conditions are so different. Again, trading is 20% technical, 80% literally mental. So you need to focus on that mental aspect, and that mental aspect, you can only gain experience in that from live trading and not from the backtesting. That's why you should only spend like 20% time backtesting, which is like the mechanical edge, and 80% live trading, which is going to be your mental edge.
Yeah, makes sense. And then, to date, what's been your biggest trading achievement? Was it passing that first challenge, or knowing that you have an edge, or setting up your community? What's been your biggest achievement so far in trading?
Yeah, so trading wise, I mean, I have a trading YouTube channel called The Trading Academy where I post daily market updates. So I've done now over 1,000 videos actually on that, and posted over 500 or 600 daily market updates consistently every single day. So that in itself from myself was an achievement. But I would say from a trading perspective, it definitely comes down to actually this year, January, because November and December, when Trump came into office, the markets didn't really do me very well, I must say. So in November, I was around down, let's say, -2%. December, I was break even. But then in January, I went from on a different alpha account all the way from -92% or 92,000. So my equity was like 92K on a 100K account, all the way back up into a 4K payout this January. So that was actually one of my biggest achievements in most recent history. And then obviously, like I mentioned at the beginning, doing a 3% return for over a 6-month period for myself was already a massive achievement. And obviously as well, like if you have the experience within the markets, like a 3% return, if you go to any fund like in the world and you say, look, I can generate a 3% return consistently for a period between 6 to 12 months, like you're going to be offered a shot potentially, right? So a lot of day traders, or people call themselves day traders, I always say like the terminology like day traders like a little bit overhyped, because if you day trade, people expect to like trade every single day and then maybe win every single day. But if you win every single day, or let's say 75% of the days, like your returns are going to be through the roof, right? You're going to be, people expect to make like 30-40% every single month. But like if you make that kind of money, like every single hedge fund in the world is going to send you a private jet and fly you out to their head office and hire you like that. So don't believe in the dream. Don't believe in the hype of like being a day trader and making a trade every single day and then also winning. Like it's not realistic. That's why like my approach, in my personal opinion, and I'm not saying that there's a right or wrong approach, but in my personal opinion, my approach is one of the most sustainable when sticking just to, let's say, a 3% return every single month, using the fundamentals, using the high time frame, because at the end of the day, trading is a marathon. It's not a sprint, and you need to treat it that way in order to be successful.
Yeah, I'm exactly the same as you. That's what I always tell people. If you're doing even 10, if somebody's saying they're doing 10% every month consistently, that is a huge return on a yearly basis, especially you start to compound that as well. And I always give that analogy as well. People would be throwing their money at somebody who can really prove or showcase those results. So yeah, that's the thing with trading. You got to be humble, and more importantly, you got to be realistic as well. I think,
and it's not like it's not possible to make, like a 10% return a month. Like obviously, there's going to be months where you can make a 10% return, or even a year where you can make 100% return. But there is like statistically a very, very low probability that you're going to be making 10% a month for over a 3-year period. Like statistically, it's nearly impossible.
Yeah, and I always go with the approach, 2-3%, not even every month, just on average a month, because there's going to be
Definitely.
some months, like you said, November and December. November was a drawdown, December break even. As long as it's all averaging out around 3%, then that's a lot of money when you've got 1 million in funded, for example.
Exactly. It is, man. It is definitely.
Cool. And then you talked a bit about your journey so far. I was going to ask about more, your motivation behind everything. Do you have a specific goal or a specific why of why you're doing what you're doing?
Yeah, great question. So for myself, like the reason that I do what I do is for freedom. Back in high school, I was never the smartest. I applied for all these different universities and I got rejected everywhere. Everywhere I was like at the bottom of the list because of my grades, because of my Dutch, because I live here in Amsterdam. And even when applying to international universities, they were like, okay, like the motivation is not good. You haven't done this, you haven't done that. So I was determined to do something for myself and find something for myself where I can like really put my passion and time into, because I'm the kind of person that when I love something, I'll give my 100, my 1000, my 1,000,000% to it. And that for me was trading it. So I kind of like found, and I was blessed enough to find my, let's say, inner peace, my purpose. And for me, that is just trading, and I've never left it ever since. And I'm even blessed enough to kind of like be able to share my daily market updates on YouTube as well, on the Trading Academy YouTube channel.
Yeah. And do you have any specific goals you're looking to reach in 2025?
Yeah, so actually, I want to, next to the fact that I trade on like personal capital and prop firm capital, I'm also looking to expand into currency consultancy as well, where I work together with companies and I give them advice on how to hedge themselves within the markets. Obviously, you have a lot of international companies, multinationals, especially in today's day and age, right, with the dollar like going down, then going back up again. Who rely on exchange rates. So I want to be giving companies in the future advice on what they should do with, for example, their dollar holdings, with their euro holdings, with the Japanese yen holdings. And that for me is kind of like the transition eventually that I want to make in, let's say, the next 5 to 10 years.
Okay, perfect. Yeah, and Fabio, yeah, if it's all right with you, if we jump into the charts now, maybe just give us a breakdown of some of the things you're looking at, or maybe some past trades. That'd be great.
Yeah, definitely. Let's dive straight in. Okay, great. So we're here on AUD on the weekly time frame, and as I mentioned at the beginning of this video, like I have a few set of confluences that I use every single time religiously, and it's extremely simple. All you need to do is just use them the same way over and over again. So I pretty much use liquidity. I use S&D, which is also known as supply and demand. I use PVD, which is known as premium versus discount, and I use number 4, which is called market structure. And then number 5 is pretty much my entry model, which is also known as a chalk or a change of character entry model. So this is my entire strategy. Like I'm very transparent about it because again, I have nothing to hide. Like anybody you can give this entry model to or this strategy to, like they're going to be trading it differently, obviously. And next to this, I also use fundamentals, which is a very big part of the overall strategy. But if I look here at AUD, I've kind of like already marked out kind of like the key levels that I wanted to discuss. So what I do in these kind of situations with AUD, where, for example, the very first thing that I look at is market structure. So in the past, we had a market condition here on AUD in this box where we had a trending market in towards the downside. So here it's very clear, like you get a breaker structure down, breaker structure down, breaker structure down, breaker structure down, breaker structure down. So for myself here, it's very easy. I just look to get in on the overall order flow or on the overall supply zones itself, which I kind of classify as, let's say, a buy before a sell. So I look to get in on the buy before the sell candle. I look to get in here on the buy before the sell candle. And that is pretty much, very simply said, kind of like where I try to get in as I'm a supply and demand trader. However, on the most recent price action on AUD, we've seen a, let's say, consolidative market. So when I look at market structure, you have either a trending market or you have a consolidative market. So here we have a market that's consolidating and moving sideways. So the approach that I then use is simply said the range high and the range low. So what I'm looking for here is that the range high gets liquidated. I want to see a reversal down. Here I see the range low gets liquidated. I'm looking for a reversal back up. As simple as that. So what we had there was the first confluence ticked off. So we had market structure, and when it looks at market structure, I'm then therefore looking for a potential long position. Now, second of all, I look at something called PVD. So PVD is just very simply said a Fibonacci retracement, but then what I look at is the 0.5 fib. The 0.5 fib, for me, naturally speaking, is a magnet where price will always gravitate towards. It's not like a fixed rule, like I have to see a 618 fib retracement or I have to see a 0.5 fib retracement. It's just kind of like my overall general target that I look for. And as long as we're trading inside discount, so discount is kind of like below the 0.5 fib and premium is above the 0.5 fib, I'm looking to trade from discount to premium or from premium to discount, as simple as that. So that's then confluence point number 2 discussed. Then I look at supply and demand. So when it's supply and demand, I simply look at something called imbalance candles, or I look at a sell before a buy candle as my demand zone. So for example, here on the weekly time frame on AUD/USD, I identify here a strong sell down before a bigger buy up. So this for me is a sell down before a strong buy up, breaking internal market structure here. And this, for example, will be more clear on the daily time frame, where you have a so-called overall sell down before a stronger buy up. I don't really use like these refined zones, whatever, or I don't really get into like the very precision of it, because I believe that the market is kind of like imperfect. And at times where people will be waiting for like beautiful retracements, for example, here we had a break of structure down, right? So we had like a market that was trending up, you have the break of structure down. Everybody will be waiting, for example, for this supply zone here to get hit to then go short. However, sometimes the market is very impulsive and it will already start pushing down without you. So you need to kind of like look at every single area of supply. So here, I just take the entire buy before the sell over here, and I just view that as my entire supply zone. And then you can see after the break of structure down, the market comes in and just pushes down again without ever retracing really high into, for example, that 618 fib. So yeah,
so would you try and scale into multiple short positions in that scenario there?
Okay. Yeah, definitely. So I follow like the order flow. So here, for example, I understand, okay, I'm going to be looking for my initial position. So here at the time, I was looking, okay, this low breaks, I get into sell position here. And then again, you see like the overall order flow. So again, the buy before the sell here, supply is in control here again. The buy before the sell was again in control over here as well. And you see it just taps in and pushes back down again. Mm-hmm. And then I'd be just continuously scaling in like that on those positions. But more specifically, like the position that I took most recently, just to finish those confluences, is that I understand on the weekly time frame, okay, we have a demand zone over here. We grab the liquidity underneath this low, and we're now looking to trade back up in towards that 0.5 fib. So on the lower time frame, being the 4 hour, for example, I'll be looking for long positions in towards the highs. Next to that, liquidity. Obviously, this for me is like a liquidity grab underneath the lows. And as well, next to that, you can kind of see some manipulation going on where you get kind of like the initial reaction up. The market comes back down one more time to stop out those early buyers, and then it gives like an even stronger V-shaped reversal. So for me, that's also kind of like liquidity ticked off. Now, when it comes to the entry itself, mainly taken on the 4 hour, very, very simple. What I look for is, again, here, the exact same confluences. We liquidate this low over here, which was very clear on the weekly time frame. We get a V-shaped reversal up. Here we break market structure. Then what I look for is the 0.5 fib retracement. So we get the 0.5 fib retracement over here, right? So after that break of structure, the market starts retracing down. Here we take out equal lows, which I view as liquidity. So again, number one, we had the lick. So I just call that liquidity. Number two, we have MS. Market structure is bullish. So I'm looking for upside continuation. Number three, PVD. We're back down in discount and we're looking to trade back up to premium. And then number four, I use S and D. So I just wait for a supplier demand zone to be created. So in this particular example, if I just clean up my chart, because I like to keep them nice and clean, we see here, okay, we take out the equal lows. Here again, exact same thing as on the weekly time frame. You kind of like get out those early buyers again here who start buying like on this bullish reversal. Those people get stopped out. Here we see a break of structure internally. Boom. Then what happens? Again, I just take the entire sell before the buy over here as my demand zone. And then inside, you could refine it if you would want to, for example, this demand zone over here. Again, I just take something called a sell before a buy up. I enter on top of that with a stop loss of around 60 pips, which for AUD/USD is pretty big. And I just target the highs again for around a 1 to 2 risk to reward at the time, because my account was running in around 1% drawdown. Or 1% profit, excuse me. So with the 2% return, I finished the account for a 3K payout, and then I traded on 2 different accounts. So in total, that will be then around a 6K payout.
Yeah, and do you factor in fees and overnight fees in regards to your risk to reward, or?
No, so I'm pretty fluent with it.
Okay.
I just adjust based on what I see is the market sentiment. So at the time, for example, this sell-off here in towards the downside, like it was a fundamentally driven sell-off, based on like the fact that the sentiment in the market overall was going to be risk off due to tariff news. Obviously, Trump as well speaking on the tariffs, so the entire market starts to sell off. Here as well, this sell-off in towards the downside, or this gap that you can see over here, was also based on the overall tariff news that was mentioned by Trump overnight at the time. I can remember this is the 3rd of February. So again, he said something about tariffs on Sunday, like tariffs are going on effect Monday. Then initially the dollar kind of like jumps up. So that means AUD/USD down, because obviously AUD is a risky pair or a risk on pair. So traders don't really like when the market is risky to, for example, go long on AUD. But then I understand, okay, this is just like a temporary push down from a fundamental perspective. And then technically, it also aligns with the fact that you get a liquidity sweep and then kind of like a V-shaped reversal, showing that a lot of buyers are getting into the market there. And then I just look on the retracement again to get in on a new nice position from discount prices after grabbing liquidity, looking for the market structure shift. Yeah, I can talk about this for days, as you can see. But
Yeah. No,
for me, like,
all
it's
good
just
stuff,
a
Fabio.
textbook
Yeah,
play.
good stuff here. Yeah, no,
It's a textbook
it
play for
seems a
myself.
really clean strategy as well. You know, there's no tons of indicators. It doesn't seem overly complicated, which I guess is great for teaching new traders this type of strategy. And
Yeah,
like you said,
definitely.
it's all 80% mental anyway. So
Definitely. And I even took like a loss here as well, just to be like fully transparent as well. Like on AU, for example, here we swipe this low over here. So sometimes it doesn't work, right? So here we swipe the initial low. And then what you saw here was, again, the break in market structure up. We retraced into this demand zone. I actually went long, I think it was last week, from this demand zone in towards the upside. And then you see it doesn't, like the trade doesn't play out, because again, this push down was fundamentally driven. It needs more liquidity, and then again you see like the V-shaped reversal. So sometimes it doesn't work and sometimes it does work, but that's like the core of the strategy, that you need to keep executing and you need to keep believing in your edge, because as soon as you stop believing in your edge and you stop executing, that is when you're going to kind of like go behind. Like the edge is going to start continuing or moving along without you, and if you don't hop on that train, you're going to like keep on missing the train, and you're just going to go down a hill or down a death spiral, where it's going to be very hard to recover from, because obviously like your wins and your losses are statistically like distributed randomly, right? So you could lose 3 trades in a row, you could win 3 trades in a row, but if you don't take those 3 winners in a row, then it's like a high probability that you're going to take 3 losses in a row. And then again, like if you take those 3 losses and then you stop executing, you don't take those 3 wins, and then you think, okay, I saw 3 wins, I believe in the strategy again, I'm going to start executing again, then you might have like the probability that you're going to take 2 losses in a row again. And then you're just going to get into this death spiral of like doom and death. So my biggest tip is always like, have that mechanical edge, keep on executing, keep believing in your strategy, and then good things will come.
Yeah, and I guess that's like you said earlier, that's why it's so important to keep your risk low on these live accounts, because you don't know when your winners and losers are going to come. You know, if you got you take 100 trades and you've got a 50% win rate, for example, you could have 20 losses in a row for all you know, because you don't know when these wins and losses are going to come.
Definitely.
And then how many trades roughly do you take a week or month?
I would say around 2 trades a week.
2 trades a week.
So
okay.
Around on average, 8 a month. Not really more than that.
And then how long are you holding these trades? Maybe like 1 to 3 days, I imagine.
So between, I would say, so my average holding time is around, I think, 72 hours. So around 3 days, yeah. But I've held trades for, to be honest, 2 weeks. But that's been kind of like the longest position that I've held this year was actually a Euro USD buy from around 1.02. So I got in at the time, where was it? Around, it was a weekly trade actually. Whereas well on the weekly time frame, and again, my chart is a little bit messy, apologies for that, but we swiped the overall low here. So at the time, we swiped this liquidity low. Then again, I do the same thing over and over again, where here we had an internal market structure break. So this is the high that broke this low. We then form an area of demand on the overall sell before the buy. And then on the lower time frame, being the daily at the time, I got in on a demand zone actually over here. So this was my refined area of demand. And I then got in on that demand zone, used these lows over here, these ascending lows as liquidity, demand zone, market structure flip bullish, tapped in, push back out. I had a wider stop loss just to be sure. It was around 100 pips. And then I swinged it up. I believe I was holding this from around the 3rd of February all the way for, what was it? around somewhere here is where I cashed out. So around 3 weeks, 2 weeks, I was holding it.
Okay.
So that's kind of like the longest trade that I took this year. Should have held it longer though,
Yeah,
but
yeah.
as you can see. But you can't always be right, obviously.
Yeah, hindsight as always with trading. And then I always ask swing traders this, do you sleep well at night having these trades running?
I love sleeping.
Do you? Okay.
It's the best, man. Swing trading is definitely a big benefit to sleeping because I don't lose a trade every single day. It's not like, oh, I have to wake up tomorrow. Oh, it's London session. I have to wake up on time and I have to check, okay, what's London Open going to do? Is it going to be an Asia sweep? Like this for me is not relevant. So that keeps it nice and simple for myself. Yeah.
Yeah. Perfect. Yeah. Amazing strategy there, Fabio. Yeah. So thanks for sharing. And yeah, I'm sure some of the audiences can take some snippets of that and maybe incorporate it into their own strategy potentially.
Yeah, definitely. I think there's a lot of value to be taken from this, and definitely the key takeaway is to keep it nice and simple, understand what the overall fundamental driver of the market is doing, and then just try and execute with a technical bias and based on a mechanical trading strategy that I literally just explained. It can be as simple as that. And if you apply those two concepts, combine them together, for me, trading has never been, and I would never say that it's easy, but it's never been so simple. And stress-free. And this for me is, I value that a lot. And for me, is the most important part of my trading.
Yeah, I think that's the key thing with that sentence is a stress-free life. There's no point in trading and being stressed all the time because that kind of defeats the object.
Definitely. At the end of the day, like you're trading for like a better life, right? But at the end of the day, like most traders who, like in my opinion, who day trade and trade the lower time frame, like you have a more stressful life than a corporate life, right? Like you have to
exactly.
Like you're a slave to your own strategy. Let me put it that way.
Yeah, that's a good way of putting it. I like that. Yeah, very good. Perfect. Yeah, we'll jump back into the questions then. Yeah, do you want to share anything else?
No, I think this was a good breakdown of my strategy. And as always, if there's any questions, let us know in the comment section and I'll be there to help out.
Yeah, nice one, Fabio. Yeah, let's jump back into the questions. So what was your experience been like with Alpha Capital Group?
Yeah, so the experience has been extremely good so far. Like I said, I've been trading on the same account since October now, over $25,000 in payouts, and 200K funded now for consistently over 6 months. So overall, a good experience. Haven't had any issues, and obviously the team is always there to help when needed. And super happy. If you're consistent, you know what you're doing, then you will be rewarded.
Yeah, and was there a specific reason you went with Alpha, or is it more, that they're just a big brand within the space at the moment, or was it a recommendation?
Yeah, definitely because it's a big brand within the space, and also just because of the fact that the spreads were good, and I also like the fact that there's an active Discord community, which is always a big benefit as well. There was also a lot of social proof online that I could find, podcasts that I found interesting to see as well, and that for myself gave me the trust. Obviously, being a content creator as well myself, it's always nice to see when other people are also in the content space and are doing good.
Yeah, and I can echo that as well. I just find the Discord group with Alpha, it's just a great place to learn and bounce ideas and even get motivated off other traders, that have the same similar interest and goals as you. What's your view on trading communities as a whole? Do you think they add value to a trader?
I think to a certain extent. I think that it's very important to find a certain balance. If I can speak for myself, like when I became profitable, I wasn't actually even in trading communities. I actually left trading communities myself just to kind of like block out the noise. The biggest problem that I had is that I had a certain bias on a pair. I was ready to go short. I saw two people sharing a long position, and then I switched my bias. I took that long, hit stop loss, hit myself in the head. Had this too many times, done that, been there, and now I've made the transition like after a certain period of time, after I understood, okay, like at that point in my journey, it was not good to be in a community, but now I'm at a stage where I believe that much in my own strategy, I believe that much in my own execution, that it's actually good to be in a community. So I think in the beginning, like the very beginning of your trading career, be in a community, engage with people, be active, because that's where you're going to get a lot of value. Don't stay too much stuck in your own feedback loop, because if you just only listen to yourself and say, next time I'm not going to do that, like you're going to make that mistake again. By being active in a community, there's also people who can keep you accountable. However, if you get to that stage where you understand how to analyze the market, but you're not actually profitable, it's good to maybe leave the community, stay a little bit inactive, focus on yourself until you're profitable, then come back, share value, and then you will get value from other good traders as well.
Yeah, great advice there. And then is there anything you'd like to see added to the Alpha community or the platform in general?
I think in general, it's always good if fundamentals are added into communities as well. I think the emphasis and the focus has always been too much on just the technical side of things. Obviously, I understand that the prop firm space and that trading communities in general, like a guy, with all respect, who is probably around 60 years old with very good fundamental knowledge, is not going to be active within the Discord community, except for Planty maybe at Alpha. But I think like the younger generation is too focused on just, and I'm young myself, obviously, but it's too focused maybe on only implementing the technicals, where the biggest kind of like advantage and gain definitely lies in understanding the fundamentals as well. Because if you have a fundamental bias already before going onto a chart, you will be able to understand, or you can understand that, okay, having that fundamental bias, I understand the overall swing is just going to be up or the overall swing is going to be down. And then all that rest is pretty much using that, let's say, mechanical, technical edge or that strategy that you have to just simply enter into that overall swing, which gives you a lot more peace of mind. Because a big question that I get from a lot of traders is like, hey, how do you form like a daily bias? How do I know if the market structure is going to go up or down, or the market structure is not even being respected? And most of the times that has to do with the fact that the fundamentals are causing a reversal or causing a shift within the market. Mm-hmm. So being up to date on that can definitely help, like especially in this market that is driven so heavily by tariffs, by Trump, who says one thing, and for example, your USD can shift all the way back up, mm-hmm. when most traders were saying from a technical perspective, we're going down to parity. The fundamental understanding of the market can help you realize that market structure, or why market structure is not actually being respected, or that your zones are not being respected.
Yeah, and how do you approach fundamentals? Because, there have been many retail traders out there that say, we don't get the data in time, we don't get it accurately. As a retail trader, how do you approach fundamentals?
Yeah, so from a fundamental perspective, you have to understand, first of all, that kind of like at the top of the pyramid, you have interest rate differentials. So interest rate differentials are what drive the market. For example, if you look at the dollar yen chart, why has dollar yen been pumping in towards the absolute moon, like crypto? It's because of the carry trade. It's because interest rates in Japan are low and interest rates in the US are high. People borrow in Japan and then they invest in the United States. This is why dollar yen goes up. So this is kind of like where it starts. And then understanding that the underlying data, so for example, inflation, for example, the surveys like PMI, for example, NFP, these numbers are what cause the decisions on interest rates to be made. So you have at the top, again, interest rates, then underneath that, you have inflation, you have unemployment, you have surveys. And then by looking at those, let's say, individual components, understanding that they have an effect on the interest rates, that is going to help you have or formulate a fundamental bias. And I also use a website called forexfundamentals.com, which is also a very good way to form a fundamental bias for every single week within the markets.
And are you looking at fundamentals every day? You watching the news as well, reading the papers, or is it more
so
online
I use
resources?
Bloomberg kind of like as my main source of information, and I use X a lot as well. Then I have my own Google document, like a Google Doc, and in there I update my the currency pairs every single day. So I have like different tabs. I have euro, I have yen, I have dollar, and then I have, for example, bonds, oils, stock, crypto, and then I just keep on updating with every interesting thing that I read. So I can always look back to a specific date, and like automatically by just being in the market, you're going to understand what's going on and what the effect is going to be. So for example, on, let's say, the Swiss franc, most recently, we saw that the central bank lowered interest rates, which was pretty bearish for the Swiss franc. But you can see then how the market kind of like prices that in, like the euro against the Swiss. I'm not sure when this video is coming out, but you can look at it around the end of February. You see like a push up on euro Swiss, like in the anticipation that the interest rates are going to be lowered. And then when the interest rates are actually lowered, which is bearish for a currency, you suddenly see that euro Swiss starts dropping in towards the downside. It's because of obviously like buy the rumor, sell the news, kind of like understanding of the market. But by seeing this in effect, like you can actually take it into consideration when trading, and it just changes your entire perspective on the markets. And I just like, as an experienced trader myself, who can say that he is successful within the markets, with over $100,000 in payouts, like this is what made me reach that stage of being able to have those payouts and being that consistent.
Yeah, nice, very good. And then if you could go back in time, you back to yourself when you first started trading, what advice would you give to yourself to kind of hit the ground running with trading? What advice would you give to yourself to avoid some of the pitfalls you had at the beginning?
Stick to one strategy. Definitely stick to one strategy. The biggest issue and the biggest problem that I see traders face is that they don't have a method or one method to enter the market. They keep looking at different entry models, and I understand it's difficult. Like, you have all these different YouTube videos with interesting names and kind of like these little dopamine shocks. You have like ICT, then you have Silver Bullet, then you have Turtle Soup, then you have SMC, you have fair value gaps. Like, you have so many different things, but all you need to do and understand is that at the end of the day, in my opinion, fundamentals is what drives the markets, and it doesn't matter really what technicals you use. The technicals are just simply to enter the market itself. And yeah, people may disagree with me, but at the end of the day, just stick to one strategy, read and educate yourself on the fundamentals. As I've said many times now, the fundamentals is what drives the market, and the technicals is just simply a way to execute and position yourself within the overall swing, where, yeah, the fundamentals are going to be driving the market towards.
Mm-hmm. And then in this space, the trading space, how would you like to be remembered, or what do you want to be remembered for?
The way that I would love to be remembered is as somebody who keeps it nice and simple, who actually has a realistic view on the market, and understands that to be successful, you need to keep it real, and you need to be real with yourself. A lot of people within trading are not real with themselves. They try to sell themselves a dream that it's going to be the day trading lifestyle where you're going to be making 10% return every single month. Like, it's not realistic, and you need to be real with yourself if you actually want to be successful with trading. So I think it starts there, and I think that's how I want to be remembered. I want to be remembered as somebody who is, humble and keeps it nice and simple and tells you the actual truth of the markets, because at the end of the day, like, the numbers don't lie. And if you understand that, then you're going to be good.
Yeah, excellent. Yeah, well, really appreciate Fabio. Yeah, honestly, it's been a great session today. Great call. Yeah, lots of insights, techniques in regards to your trading approach. So I really appreciate you jumping on the call. I'm sure some of the audience watching this, they're going to get some great value out of this video. Yeah, did you have any closing remarks or anything you want to say to just kind of tick off the call?
No, I just want to say thanks for having me. It was a pleasure. I hope kind of like my simplistic vision of the markets, my explanation of the strategy, and my kind of like pitch of understanding the fundamentals of the market is going to inspire a lot of you who are watching at home to also understand more about what actually drives markets, and to educate yourself a little bit more, because I think that is what us as the younger generation of traders should definitely commit to, and should believe in, and spread the message if you believe in it as well.
Yeah, definitely, Fabio. Yeah, and we'll have to get one of these in a year's time, and we'll kind of have to see where your progression is in a year's time. I imagine the payouts will be a lot higher, hopefully.
Definitely.
Perfect, Fabio. Yeah, we'll appreciate your time, and I'll see you guys in the next interview.